Hi, everyone. This is Jason Barrack of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest and one of my good friends for over a decade now, one of my top mentors in the gold and silver industry. Used to work with him on reading his newsletter, asking him tons and tons of questions. I'm sure he thought I was annoying when I was a college graduate student about mining stocks and gold and silver royalty companies, supply and demand. He's written more silver books than anyone else, including the Silver Manifesto, and he's written a paid newsletter, The Morgan Report, for decades covering commodities, specifically gold and silver royalty companies. He was in early on a lot of these top royalty companies like Silver Wheaton. He was in basically at the beginning of the company long time ago. David Morgan of the Morgan Report, thank you for joining me again.
Well, Jason, it's great to be with you, and thank you for those kind words. And you did not annoy me at all. I'm still passionate, even at my ripe old age. And, I think it was you, Mo, and Chris that kind of got a hold of me around the same time. And, it's kind of hard to choose who to, bring on board. But I brought Chris on board, as you well know. But you've certainly been very kind to me because of all you've learned and continue to learn. And, I need to put you on my podcast here pretty soon. Just the pre-show was worth recording. So anyway, I'm here and thank you for the invitation.
Yep, and we can talk about the Cold War on your podcast, Cold War 2.0 with U.S. and China, the technology arms race that's heating up, and like what the currency wars and trade wars. Seems like a lot of the Jim Rickards book from currency wars with the financial war games with the U.S., China, Russia, them not wanting U.S. treasuries is playing out now. And yet here, David, when we're recording this interview on Friday, May 2nd, 2025, the U.S. dollar gold price is correcting a little bit. It's a little above $3,200. What's surprising to me right now is the S&P 500. It's above 5,600. Are you shocked that we have a stock market valuation like that, despite like all these macro conditions, the problem with the U.S. government and Trump's tariffs?
I don't know if I use the word shocked. I mean, dismayed. I've been, kind of on the leaning toward the bearish side for quite some time. I mean, any metric you want to use, classic or otherwise, the stock market is overvalued. And because of that fact and knowing what I think I know, uh, there's a distribution cycle. When you get a high priced anything and you're an insider or professional, you can't dump all your stock at one time or you'll drive the price down. So you distribute it slowly over time and give it to hedge funds, pension funds, and generally the public, which is the last ones to recognize that the shift has taken place. And so to do that, you do a distribution cycle, but it's been in that for a long time. And one of my keys was when Buffett got out in such a big way. I mean, he cashed out enough cash to buy the entire silver market for the next decade. So I'm sitting there thinking, well, this has got to be about it. We started to see it roll over. But long term, let me take a deep breath and just tell you my analysis. Yes, it's top or topping. And how do I know that? Because I price it in terms of gold. One of the first books I read when I became interested in this field was The Invisible Crash by Jim Dines. I don't think he ever put it in hardback. Regardless, it showed the crash in terms of gold. So put the gold versus Dow, the Dow versus gold. And if you do that with the S&P and you look at a chart that's probably 20 years old, you'll see a huge head and shoulders formation with the peak of the stock market in 2020. Now, I know the numbers are bigger now, but that's not the point. You have to measure it against a constant. An ounce of gold is a constant. And because of that, the right-hand shoulder has definitely taken place and it's going down in terms of gold again. So I'm pretty sure that in real terms, we are already there. And in nominal terms, we're going to get there fairly soon. So I'm still bearish on the stock market. You can always make money in the stock market. There's little doubt about that. But you need to be very careful when the overall market becomes a bear market rather than a bull market, because now things are not as favorable. So I'm looking for opportunities still in the resource space. Also looking at some tech stuff, looking at oil quite a bit, but I don't think we've bottomed yet. But I'm basically advising or staying away from the general equity market. I think this idea to just keep buying, the S&P 500 ETF is the only way to go. That'll beat the market. Most people can't outpick stocks and beat the S&P. So just use your ETFs and, Bob's your uncle. You're a great investor. I think that's going to come to an end.
I'm looking at the macro trading service bar charts. They have this chart, and it says, according to them, with their research, retail traders, bought stocks and ETFs last month at the fastest pace in history. $40 billion came into the general stock market indexes in the U.S. and like SPY, the S&P 500 index, 40 billion in a single month. That's a lot. Maybe it's like Jim Cramer or someone else is influencing him. Seems like a lot of people think that the U.S. economy is doing well, but when I look at actually like the macro information, the other countries not wanting to buy a lot of U.S. debt, not large sellers of U.S. debt, that spike in the 10 years Treasury market, David, I just see a lot of red flags. I guess the stock market isn't reflecting reality then.
I don't think so. And of course, why did it move up? You just outlined why. And usually the retail investors are the last ones to get the message. And as I said, in a distribution cycle, I'm sure the people that are selling into that rally are probably pretty happy there's so much volume because that gives them a lot of reasons and they can sell more than they might on an average day. So it is disheartening to me because, I do see what's going to take place and it's not good. You look at what the big gorilla is, and it's the bond market, the debt markets. We all know that. And if you don't trust a dollar, in 6 weeks, what it's going to buy you in the grocery store, why would you trust it for 10 years? Why would you trust it for 30 years? And obviously, these countries, for that reason and several others, are basically dumping the treasury market, and that will continue. So the trend is the smart money, sovereign money, big money is all saying, I'm not trusting the dollar. Stock market for the time being is ignoring that signal, and yet they are very much correlating now. The old adage of the 60-40 portfolio and the bonds go up but stocks go down and vice versa, total nonsense. They've been very correlating for a long time now.
Well, I think, David, that a lot of countries are still using dollars to settle global trade, so cross-border settlement. I think the issue is in the treasury market that with all this debt that needs to be refinanced, the rapid pace of the U.S. national debt growth. I mean, Trump did inherit a mess. Yes, he was running $1 trillion budget deficits in his first term, but things like the last 4 or 5 years seem to have gotten way above $1 trillion budget deficits. I even had the numbers for end of 2024. I mean, we were close to a $3 trillion budget deficit, and over $7 trillion of the rapidly rising U.S. national debt needs to be refinanced soon. I mean, the math just looks broken at this point. Is this like the scenario that you and many other macro experts have been warning about for years, where eventually we would run out of options, run out of ways to kick the can and delay pain, and that we'd get to a math problem point where there's no way to avoid the pain?
That's it. You summarize it probably better than I could, say it back to you. I mean, the other thing is you start to go into an exponential function, not necessarily to the power of two, where it doubles every year or something like that, but it starts to increase and increase more rapidly. And there's all kinds of games and financial gimmicks and accounting things in that are developed. I mean, look at the way the CPI, or as Mike Maloney says, the CPI is now reported versus where it was in 1980 by shadowstats.com. On and on it goes. But no, I think you summarized it quite well. And this is the end. We have hit the end of the road. And the bond market is certainly saying that. And what's interesting is Trump definitely wants a lower dollar, and he definitely wants interest rates down. But if you start selling, the only way that you're going to keep suckers holding on to the US dollar in the debt markets is to keep the yield high. So you could be in a position where people think, well, it's got to go down, and yet it's not. So this is very trying times, and unfortunately, we are at the end of the road, or at least as a metaphor. And what does that mean? It means they've got to start a new system, and that's what I've been talking about. I know you have. What does the reset look like? What does the new monetary system look like? And that was my speech I gave at the 50th anniversary gold show in New Orleans. The new monetary system. I took it basically straight off the BIS website. And they outline it perfectly clearly what they want. And it's basically a digital currency run by them. And there could be other ones, but they basically are still the banker's bank. And it's pretty clear that the new system is going to be implemented at some point. Now, what they do with the debt that exists, they're going to reprice it, if they're going to just remove it, if they're going to pay it off with Bitcoin. I really don't know how they're going to solve that problem. It's not outlined on their website, but it's very apparent. And the last one that I wrote about this, Jason, in the Morgan Report a few months back, and that was this character from Cantor Fitzgerald talking about tokenizing everything. Well, if they tokenize all the grass and all the trees and all the meadows and the rocks and everything else that are on the federal lands, they could recollateralize the debt and they could continue the same game for a long time. Because I forget the number he gave, I had it in the report, but I mean, this is something that kind of tightens my stomach, to put it politely, because these guys keep thinking up other ways to, let's say, perpetuate this debt-based monetary system that's not really grounded in reality.
I think a lot of people didn't know or didn't care that over the last 15 or so years, David, that the US federal government was only paying about $300 billion per year in interest payments while the national debt just grew and grew and grew. Like the base case was $1 trillion budget deficits each year. It didn't matter if it was Republican or Democrat controlling Congress or in the White House, it was $1 trillion budget deficits. Well, here we are. That has compounded, like you said, to this point where the national debt, I think it was like only a couple, $5 or $6 trillion, I think, in 2008. Then the Federal Reserve's balance sheet during that crisis, I think it went from 800 billion up to like 8 trillion, something like that. It went up like a 10x move. And then you had the QE programs. So the average person was pretty happy, right? Because their home price was going up, their S&P 500, their retirement accounts was going up, and they didn't really notice the inflation and the stagflation in the real economy that was happening because their asset prices were being inflated. So it was kind of the good, and I'm using air quotes here, for the baby boomer generation because they benefited from the wealth effect, whereas like younger people like me did not.
No, well said. And even me as a boomer, I'm starting to look at how much things have increased in Washington here since we have no state income tax. My property taxes went up substantially this year. I mean, like to the point of pain. New article written about what's going on in Washington as far as what their deficit is here and how much they're going to increase, like sales tax. Like right now, we pay about 10%, not quite, depends on your city, uh, sales tax. So they have to get the funds somewhere. And that's, what they're doing. But I don't want to make it all about me or what state I'm in. It's just, we're getting to the point where, we talked off air, the currency crisis. I mean, you just get to the point where, as Von Mises said so many years ago, where you just print and print and print. And at some point, enough people, it's not the majority, wake up that, wait a minute, I'm not going to trust this. I do not trust what this thing's going to be worth. I need to do something about it. And you've already seen the run to gold start a couple of years ago, as I forecast, and now it's out in the public to see. Or making these new highs. It's backed off, and I actually think short term that we are going to back and fill and consolidate in a trading range for gold probably through the summer. Could be wrong, but I think that's the way I see it currently. Nonetheless, the game is far from over. And as you said, when you get a situation where the interest on the debt is basically equal to the defense budget, we're in real problems. And people are now just waking up to it.
Well, no one in DC actually wants to cut spending. I mean, I saw an interview, well, not an interview. He was on it was on like C-SPAN or something, and Rand Paul was giving a speech on the congressional floor, Senate floor, I guess. And he was talking about how like these rhino Republicans or neocons like Mitch McConnell and Lindsey Graham and these other guys, they don't actually want to cut spending. They want to increase what the debt ceiling by another $5 trillion to give themselves some cushion before the Trump tax cuts get passed. So I mean, like, it just sounds like smoke and mirrors because they're saying like Doge, spending cuts. Okay, that's good. I'm glad that people are aware of all the waste and corruption, but they're not actually going after the major spending cuts that need to happen to fix things, like you said.
Well, I heard one of our commentators in our peer group, I forget, I give him credit. I always love to give credit to whoever said it. I cannot remember. But he said, all this stuff that Doge has done, it's like a football field that's 100 yards long, and all the Doge cuts so far have gotten you to the 3 yard line. So
Well, no one's going to prison too for stealing. So there's tons of people that have been stealing 6 or 7 figures a year, sometimes
yeah,
more, for years, getting
yes.
their kids right out of college 6 figure jobs and rides on private jets and first class plane tickets and VIP tickets to concerts or Washington Capitals games or sports games here. And no one's going to prison yet. So I see people getting fired and losing their jobs. I see people, government employees and consultants and stuff posting that they lost their job and they're getting bought out, what they're getting some type of severance package, but they're not actually. No one's going to prison yet for any of the fraud.
Well, that's a 2008 thing too. I mean, I think they got one or two traders that were kind of the bottom of the food chain. I mean, no, the system's been broken for a very long time. It's very, very sad because, the premise of the whole system was based on the same rules, laws, and accountability for everybody. So if you were a janitor or a CEO and you did the same crime, you get the same time. But as we all know, that's not the real case. And
Well, the judges aren't even applying the law properly, David. They're like selectively enforcing. We have like political activist judges, and they're ignoring it and committing felony. So we'll see if they actually get end up in prison. I mean, like that means the rule of law is busted. If like the prosecutors and the judges are selectively doing stuff and ignoring and committing felonies because they think that they're not going to get in trouble for it. I mean, that's just huge red flags of a banana republic.
yeah, I agree. Jefferson warned us if we lost the judicial system, it was basically game over. My words, not his, but the idea of being, checks and balances with the legislative, executive, and judicial, that the judicial really held the hot hand. And if anything went wrong, the Constitution's laid out and here's the law of the land, blah, 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 blah. Well, that's obviously been overlooked so much now, it's almost a joke. And it's very unfortunate because the idea that we're all equal under the law is a very powerful way to run a society, or at least to uh, bring a culture together that's fair. I mean, there's no such thing as fair in life. The first lesson I taught my two daughters was life isn't fair, but at least under the law, it's fair, or it's supposed to be fair, I should say. And that is, again, same crime, doesn't matter who did it, same amount of time. But again, that's so corrupted, and it's, so much political influence into the judicial system, and these courts basically running their own show and pushing back in situations they really have no right to do so, but doing it anyway. And people are so ignorant. I mean, really, part of it, I'd say a lot of it is our fault, meaning the citizenry, because they really need to know what the law says and how to uphold it and push back on these things. But people are really taught that all you have to do is go to the voting booth and check that correct box and someone's going to solve that problem for you rather than question the whole premise of everything. Are you even qualified to run this thing? And this is where the AI comes in. I'm off on a tangent, but I'll give it to you and you can feed it back or not. We'll move on to something else. But this is where the artificial intelligence is uh, so fascinating in so many people. So, well, it's quote unquote objective and it can make the right decision for us. So now instead of giving it to a politician to solve it for me, hey, let's let the AI figure it out for us, and that's the technocracy mode. This is where they actually get rid of the political class for the most part, and the machines are running it. And this is not not good. There's actually a science fiction book that I was read to me when I was in second grade called "The Machine Stops," and it's all about basically a technocratic society and what happens when the machine doesn't work properly.
There's actually comic books, Marvel Comics with the Kree. They're an alien race, and they have like a artificial intelligence, a collective. They actually kill, sacrifice their smartest people, and put their brains into a collective artificial intelligence, a neural network. And the artificial intelligence, the supreme intelligence, it runs the society for better or for worse. So it makes decisions about like where to spend money, who to kill, who's a bad person. That we're getting into stuff that's basically anti-constitution. Not that the Constitution's enforced anymore anyway. I mean, I see all the time politicians say this is unconstitutional. I mean, the Constitution doesn't say we need all these government agencies, government spending, that we need to give, freebies out to all these people that are crossing the border. It's just kind of ridiculous. The majority of stuff that's happening is unconstitutional. It's not listed in the Constitution. The Constitution is just like a small set of rights for citizens who are paying taxes.
No, well said. I mean, it really is supposed to be a restriction on government. Really, the whole idea was to give it very little power. I mean, to give it just enough power to protect our God-given rights. And yet, of course, it's morphed into what we have. But, and the states' rights have become secondary. But really, when they wrote the Bill of Rights, the last one was the 10th Amendment. And that, of course, really, states' rights superseded federal rights at that time. And then the smart lawyer class got in there and they created a fictional state within a state. And that's why you have a federal government that actually overlays the states. I mean, when you look at WA for Washington and all these two-letter designators, those are federal jurisdictions on top of the land.
Well,
That's actually at law fiction, but it's a
it,
legal fiction.
It's financial, David, because the states normally want the funds, the grants. So the research grants, the funding for Medicare, Medicaid, infrastructure to fix roads, other federal programs. So they do what the federal government in DC tells them because of the Federal Reserve Bank, funding all of this, Congress funding all this. So basically the states a lot of the times just do whatever DC tells them to because they want all the funding that DC is giving them that the Federal Reserve Bank is supplying in Congress.
Well said. It circles back to, give me the power to create money and I care not who creates the laws. So, break the law. I don't care as long as, you bow down to get those funds to do whatever, what you just outlined. Onward we go.
So let's transition to gold now. Do you think that the main macro trade for these non G7 central banks, these large pools of capital outside the United States, they're looking at all these problems in the US, the Trump tariffs, the budget deficits, the interest payments on the debt, how quickly the national debt is growing, how the US's finances are a mess, the recession, the tariffs, the inflation, all this other stuff. And they're just saying, you know what? The last 3 years, the Russia sanctions, Trump, we don't want any of this anymore. We're not going to be buying a lot of US treasuries. We're going to start diversifying our foreign exchange reserves into gold. Do you think that that's a good summary of the macro trade from outside the US?
Yeah, well said. Now that's it. There's little doubt. Again, I kind of flagged it as the run to gold being started by the central banks, and that's exactly what's happened. And now it's, as I said earlier, it's spilled over into the really not the retail market. I mean, this big run that we get went from basically 2000 a few years back up to 3,500 recent days has been primarily by large, countries, nation states, and central banks. It's the retail market basically sitting on their hands. There's some whales that are coming in, but the retail, buy an ounce of gold every month or every 3 months or whatever. Most of them are on the sidelines. Some are selling back in. And personally, I think gold relative to silver and platinum actually has gotten ahead of itself.
Do you think we're going to see bankruptcies from some of these US retail bullion dealers that maybe use debt or hedged bad, that they use debt to buy inventory, thinking that, like, oh my God, gold price, silver price are going up. We're going to be able to sell a lot of gold coins and bars or silver coins and bars at high premiums. And it seems that the exact opposite has happened the last year or two.
Absolutely. And let's explore that a little bit because a lot of people don't know how the market really works. But if you're a wholesaler and you are kind of the buyer of last resort and you've got to buy, $5 million worth of gold and $10 million worth of silver, and you don't have that much cash on your balance sheet. So you have to go finance with the bank, which you've got a huge credit line with, because it's secured by precious metals. But you got to buy that back at, a discount in some cases. Nonetheless, you got to pay for it. So how do you do that? You borrow the 15 million and it's at 5% interest right now or 4% or whatever. So now you've got a carrying cost on that metal and now no one's buying that metal. So it's sitting on your shelf. So you've got a carry cost of 4% that may be, compounded if you got to keep buying more. And so as you said, those are the specifics of why some of these companies are going to go bye-bye. And the other ones are some of these IRA gold places. It's like, well, we want to get your, we'll store your gold for free or next to nothing because they're betting on the fact that there's going to be transactions to make up for it. If there aren't transactions or there's sells rather than buys, then these people are also in trouble. So I think there is going to be a consolidation.
We're already seeing that, to add to your points there. The wholesaler AMark, which is publicly traded, I mean, they're close to a near monopoly, David. They're doing acquisitions of these numismatic coin dealers, online bullion dealers, because they already own a lot of the wholesalers and the refiners. They're just consolidating the industry. Now, they're not buying immensely profitable companies, but they are buying assets cheap long term, and they're talking about taking a longer term view. So they've been buying a lot of these companies that you just described that were close to bankruptcy. I think some of them had almost $100 million in revenue and only a couple $1 million in EBITDA.
Yeah. No, it's I mean, I'm pretty close to the industry in almost all aspects, as you well know, and that's the case, and it's sad. And I don't like to see a consolidation. I mean, it's just like the central bank argument. A lot of these smaller banks are going to go out of business, and then it's going to get more and more powerful to the main money center banks. And that means, if you've got one powerhouse, you've got total control. If you've got five, you've got more control than if you have it diversified among 500. And I don't like to see that in any industry, let alone the precious metals.
So if the U.S. retail investor is not buying gold and silver coins and bars at premiums, does that mean you think we're going to see the Swiss gold refiners? Are they going to be buying this retail bullion that was meant for the retail investor? Are they going to be buying it close to spot prices or maybe even at a discount and then recasting that into 4 9 kilobars? And you think that that's going to end up at either central banks or it's going to end up for the Asian retail investor? Do you think that that's going to be like the trend for the next couple of years, probably?
I don't know, it'll be for a couple of years, but I think that is the trend that we've started into. Yeah. I mean, a lot of these people that are selling back isn't because they're wanting to. It's because they've lost a job, they've been replaced, they hit retirement, they want to be in more safe investments, which of course gold and silver are the safest as far as history is concerned. But you're taught you want to be, cash or maybe T-bills because you get income and all that. And so you're seeing a lot of cash outs that you are forced upon them, not a decision that they wanted to make. And especially on the silver side, there's been a lot more sells on the silver side. And silver, of course, hasn't performed nearly as well as gold the last several months. I mean, the gold silver ratio, as we know, is sitting around 100 to 1. But nonetheless, people have what they have. And if they have a need, they're going to do it.
So you think then that the gold to silver ratio and the silver prices being relatively low versus gold and where the ratio is that reflect that retail investors are not buying because the main demand driver for physical gold is what non-G7 central banks the last 3 years doubling their monthly purchases compared to before the Russia sanctions, and then what the other main demand driver is it Asian retail investors and like pension funds and insurance companies.
Exactly. I mean, I did a speech, and sometimes I get on a roll, or I think I am, and I wrote one. I forget what it was, probably about 5 years ago, and I forget the exact name, but it was "What if silver was treated like gold?" And I made the whole argument that if silver was a monetary metal, then you would see a whole different dynamic than what we have. It's mainstream considers silver to be only an industrial metal, then it takes on that characteristic. Now, there are times when the public at large says, no, I'm going to, it's a safe haven like gold is, I can afford it, and that type of thing. I wouldn't be surprised to see something that's kind of the opposite of what happened in 2011. So let's review that for just a moment. In 2011, silver peaked the last day of April or May 1st. So whatever it was, 11, 14 years ago. It was just about this time silver had made its run to almost $50. And then in September, gold made its peak around the $2,000 level, which was what, 4 months later. And I think this time it's possible that we could see gold has already peaked at 3,500, going into a trading range, as I said earlier, and silver and platinum may actually come up relative to where they are now. So gold could go, let's say, flat, and silver could get a gold silver ratio down to, I don't know, 70 or something. And platinum may get to be, you know, 1,500 the ounce while gold's still sitting at 3,000 or whatever. So is that going to happen? I don't know. What I do know is the dynamics for platinum. It's very tight. They really don't have that much above ground supply. It isn't used that much, like silver is, but nonetheless, it's a very, very small market. Silver continues to go in these massive deficits that have continued for 4 or 5 years. It's, according to the Silver Institute, going to continue ad infinitum. And all we need now is a little bit of buying. If the Chinese catch on to the silver market as purportedly they have, and I'm trying to verify that again. I did it with the Ghost on Twitter, and he's pretty well connected. I need to talk to Eric Young and see if I can get a little bit more insight. But there is a big arbitrage between the Chinese silver market and the New York, London market. So I haven't given up yet, and I'm not trying to just talk my book. I'm over invested silver relative to gold, but I have them both, have platinum as well. I think there's got to be something's got to give here, and it's not over yet. I don't think that the final run in the metals market is really over by a long shot. Although we might get a pause that's long enough, Jason, for people to say, "Oh my goodness, I thought it was going to just keep going up," and then they sell out. They get 3,000 instead of 3,500, and then once they sold their last ounce of gold, then it takes off to 4,000, which is how bull markets work.
Well, also to add to your points there, I mean, the silver market does not have non-G7 central banks buying 1,000 tons per year, dollar cost averaging enormous amounts each month. So that's like a steady stream of demand. There's additional swing buyers for gold, but the silver market does not have that where the central banks are stepping in and having enormous amounts of tonnage bought each month. So that's one of the main reasons why the gold price has been doing very well. You also have the gold price in the other currency. So that was doing very, very well before the US dollar gold price. What the gold was at or near an all-time high in many other currencies, Japanese yen, Chinese yuan, euro, British pound, many other currencies before the US dollar gold price gapped up basically over the last like 8 to 10 months.
Well said.
Well, the other issue here with platinum and palladium, I mean, I think it's a contrarian trade, like you said earlier, with energy. So, like uranium, oil, natural gas, those are kind of out of favor stuff right now. Platinum and palladium's been in a bear market for the last couple years. People keep trying to pick bottoms. I mean, I think a lot of the producers, David, with these prices, higher costs, yeah, energy's down, but overall, the costs have to be still rising in the mining industry. Like for gold miners, the last like 4 or 5 years, the supply side for the platinum miners has to be hurting right now. There's almost no low cost supply that's going to be coming online other than the Platreef mine in South Africa. And most of that mine is automated. It's going to be like robots and conveyor belts. It's going to be almost fully automated once it's up and online. So the other platinum and palladium mines, David, like they could be looking at bankruptcy if we don't get a rally in prices in the next couple of years.
Yeah, I agree. I mean, I just posted something on one of the platinum mines doing rather poorly, on their financial statement, and that's going to continue. And I mean, South Africa, 70% of the platinum comes from there, and they've got energy problems, they've got electricity problems, not let alone political issues. And a platinum mine is very, very difficult. I mean, it's very, very hot. And it's just not an easy metal to get out of the ground. It's 15 times rarer than gold, and yet it is required for high tech. And then, of course, there's I'll put the question mark around the hydrogen economy and how platinum fits into that. I read a lot. I haven't really made up my mind. I'm not an expert on that, but nonetheless, it certainly has its uses as a catalyst. So I like it from the aspect of it is undervalued relative to other metals, even probably to silver, and that it's a low risk entry point. So you almost can't lose because the cost of platinum out on the ground in most of your South Africans mines is 11 or 1200 the ounce. You're buying it under 1,000. You probably got a pretty good safety net below you.
And the other sources of supply, the majority for platinum and palladium is either Russia or Zimbabwe, which are not geopolitically safe. You look at the Russia sanctions that were on, I think the LBMA, not the LBMA, the London Metals Exchange was not buying a lot of base metals from Russia. I'm pretty sure they also put a tariff or a ban on platinum and palladium from Russia too. Or Russia or Putin retaliated after that and said he wasn't going to even send any after they threatened to put a tariff on him. So the whole thing's just a mess. It's not reliable supply either.
Exactly. No, that's right. They put the tariff on, and I'm not sure it's still on, but it probably is. But you're right. They did do that.
It's just a mess. I would not be investing in any Russian mining companies right now with the sanctions or anything like that. So I know people are like, oh, the Fox News and stuff are like, oh, the Ukraine minerals deal. I mean, that's like 10 or 15 years away. Maybe they have some of the same geology as Russia for some of the metals. We're looking at many, many years before any of those metals are actually produced.
I agree.
Okay, so I want to ask you about profit margins, free cash flow for the gold miners right now. You've been through a lot of different cycles, bull markets, bear markets. Are these some of the best profit margins and free cash flow that you've ever seen from the senior and mid-tier gold miners?
They are. I'm just surprised that, you've got Drunken Miller and a few others that see it and invested, I guess early in the cycle, because if you really want to catch the people that bought gold at 2000 an ounce, you need to buy the miners because they're pricing gold at like 2500, and it's been, as I keep saying, to 3500. So yeah, it's more undervalued. And I say it not just by the metrics that you outlined, but if you just look at the aggregate and you look at the Barron's Gold Mining Index versus gold, it's at a low. So I mean, it's a pretty good place to I would to nibble at, I guess. I mean, it's very difficult because they've been shunned for so long. I mean, once the ETF started, they were recognized in a lot of managed money that cannot buy a commodity but can buy stocks, Section 7 license types. They bought the ETF So they're actually buying silver. They're buying gold, but they're buying it in certificate form. So therefore, it's all legal.
Do you mean
And
like
that
GLD or do you mean like the gold miners ETF like GDX? Which ones are you
I
talking
mean
about?
GLD because they didn't want the risk of the mines. They wanted the upside to gold only, and you could do it through the ETF. So even the GDXJ or the GDX or whatever, looking at the miners, you certainly got some volume, but nothing like you had in the 70s. Because the only way you could get exposure to gold or leverage to gold was through the mining. And now you can do it through the ETFs. And they even have ETFs for the miners, as you just said. So, but we look at value and not only the Morgan report. I mean, there are value investors out there, and there's some big hedge fund types or big, well-known Wall Streeters that really look at value, and gold is a value as far as some of these mines are concerned, or miners are concerned.
Yeah, I mean, the GDX was below, I think, $48 yesterday when I was looking at it on the chart. And that's way off the 2011 highs when the gold price was around $2,000. And given what the profit margins, I think the gold miners, the senior and mid-tier ones, they're in a sweet spot now where the energy prices, I don't really see a short-term rally in the energy, oil, energy, diesel, electricity where they could spike and cause margin problems. So I think they're in a sweet spot right now with free cash flow and profit margins for at least maybe the next couple quarters, maybe even longer than that.
I would say longer is my guess. It's funny you bring that up because I just finished. I don't write about oil every month. I'm publishing tomorrow for the May edition of the Morgan Report, and I went into the oil situation, which is almost verbatim of what you just said.
So, based on your past experiences, what do the producing gold and silver miners, when they have free cash flow, what do they use the free cash flow for?
Well, sometimes I waste it. I mean, I have to say that I've been in the industry so long, but sometimes I put it to good use. I wrote another article. It came from, I don't want to use his name because he didn't give me permission, but he is one of the smartest guys that I know in the mining industry. And I don't want to, I'd like to bring the article up, but basically what it says is, what do you do when you're doing well in the industry? And what he basically makes an argument is you hold your product because it outperforms what cash does. And most people that buy these miners are buying it not to buy a mining company. They're doing it for preservation of capital and leverage to the gold or silver price. Now, of course, there's all the base metals and there's lithium. I mean, I do all the miners, as you well know, but nonetheless, when you're looking at the money metals, it's a different reason than you might buy a lithium. So he made that argument, and I would say that's what the smart one should do. And I just put that article out. I'm going to tell everybody once it's published that there's no copyright on it to send it to their favorite mining company or companies, send it to their friends, repost it, put it on their social media because I think it's a really good way to look at why you should really in that space consider the most profitability being to actually hold on to some of your product.
Okay, so what you mean then is if let's say it's a gold miner and they're producing a couple 100,000 ounces of gold per year, you're saying that they should keep some of that gold instead of cash in the bank account where they might not be getting, depending on which country they're in, might not be getting good interest payments, and that they should hold it in metal instead as like some type of liquid instrument and use that in as like a cash hedge.
Absolutely. And it's been done before. Gold Corp started that way when Rob McEwen ran that company. And I've met him early on in my speaking tour and introduced myself, et cetera, and said, this is great. And unfortunately, got pressure from the shareholders, I think from the banks, but that's my own personal belief, and ended up selling it and liquidating their gold holdings.
Well,
Uh,
it's at some
First
point the
Majestic's
miners have
done.
to. Hmm?
First Majestic did it, but not of significance. But anyway, it's been done a couple of times.
Yeah, I mean they have to have really good optimization at the mines. They have to balance it. So if you have a lot of free cash flow, if you think your shares are cheap on a valuation, you can buy back shares for a share buyback program, or you can make some type of variable interest, variable dividend, maybe based on the gold price or something like that. But ultimately, with the mining, the main issue for the mining companies that most people don't understand is depletion. So if they're producing like Barrick Gold or Newmont, what 5 million ounces a year of gold, that's a lot of production and reserves that they have to replace each year. They're not going to replace those 5 million ounces at $1,000 an ounce all-in sustaining cost. It's going to be to maintain the grade. The costs are probably going to have to go up. We've seen this with Barrick Gold and Newmont. They can't find what $1,000 an ounce all-in sustaining cost gold anymore. They're looking at what 14 or 1500 now as a base case.
Exactly. I mean, I say a little more, let's say, layman's terms, but all mines end in failure. I mean, you might have the richest gold mine in the world, but there's a day that comes that you take that last ounce of gold that's economic out of the ground and it closes it down. And that's why, people you can't analyze a mining company like you analyze a widget company. It's not the same animal. And that's why you got to look primarily at free cash flow to determine whether or not you're getting value or not. And then, as you said, what do you do with it? Do you squander it? Do you put it to its best use? And the argument I just made is the best use maybe just holding your own product, especially now. I think this currency crisis it's up, it's not peeked through the door, it's walked through the door. And I don't think that the market at large has recognized it yet based on what the equity markets are doing that we talked about earlier in your show. But I think that day is not far off. We could be at a whole different place at the end of the summer rather than beginning of the summer. In fact, I think we will. I think when the reality of the tariff situation really hits and people look at Walmart and they see that, one third of the shelves are maybe not empty, but they're full of, bags of popcorn just to fill up the shelf space and realize something is drastically different than it was, the beginning of May. That seeps into the consciousness of the public at large. And this is something that people that are unaware will become maybe not aware of the whys or the warehouse, but they'll be staring them in the face. Something's wrong. Something's different. My dollar's not going as far. I can't even get what I want. I have the money for it. Now what happens?
And I think we've laid out the case the last couple of minutes exactly why investors cannot buy and hold gold mining company or copper mining or silver mining company shares, buy and hold them for many, many years and just not check them in their portfolio because something could happen at the mine. The mining company has expenses, overhead, maintaining property, plant, and equipment for some of these mines. It's $50 million, $100 million per year. If they want to optimize the mill, they have to invest over $100 million or more. They have to spend. They have to spend on exploration. They maybe have to go and buy what a junior mining company or go do a merger to place reserves. So they have to make all these expenses, or like you said earlier, they're going to end up like with one of these larger gold miners like Bear Gold or Newmont, where they can't produce 5 million ounces a year, and then their production is going to fall.
That's it. It's a tough business. You outlined it quite well.
And this is why these companies are like trades. So basically, then maybe you can do a swing trade for 6 months or a year, 2 year, year and a half, 2 years maybe, but you can't buy and hold these things like Warren Buffett for many, many years. Now, I would argue, David, with the royalty companies, I know you were an early investor in silver, wheat, and now wheat and precious metals. Those are the types of companies that if you buy them at the right price, you can buy and hold those things. I mean, wheat and precious metals over the last 12 years. I think since 2011 it was like $15 a share, and now it's what at 75, $80 with dividend
Yeah.
increase.
Yeah, we have mostly royalties. I mean, you can look at Pan American. We had that early on. I mean, I bought it at 250, so my dividend on that's like 10% relative to the price I bought it. So that was, one I've held. And then Agnico Eagle is similar, but those are really two exceptions to the rule. Almost the rest of me really want to be in royalty companies or swing trade. And as you said that, I had to laugh at myself because I've had Silver Corp and I've had AG, First Majestic, both, and I've had them as holds for some time. They're both off the list right now, but in both of those cases, I saw opportunities because of market conditions, and I traded Silvercorp, and my trade did more than the buy and hold. And the same thing with Silvercorp, excuse me, First Majestic. I In 2016 we hit that bottom and we'll get that big run, and I got into AG right at the bottom and got out right at the top, and that trade on a percentage basis probably did better than holding it. So I just want to verify what you said, and it's tough because people think, oh, I've got a gold company and it's making gold and, and all that. And when you get into a Newmont situation, I mean, the last thing I'd want to be in the world would be president of the United States. And the second thing would be president of Newmont. I mean, it would be so hard to try to determine how you're going to continue mining 5 million ounces of gold on an annual basis. That is tough.
Yeah, I agree. I wouldn't actually want to mine 5 million ounces. I think they should downsize the thing and start spinning off or breaking out selling assets. They have started selling some of the assets. I don't think that they can keep growing the business up to 6 million, 7 million. I don't think that they can do it. I just don't think there's good projects. Their costs are going to keep rising. The grades are going to keep falling. They should focus, I think, in my opinion, on profit margins, free cash flow, rather than growing for growth's sake, growing gold production or copper production, which is what like the CEOs have seemed to want to say with the speeches at these mining conferences. With the Bear Gold CEO, he was talking about wanting to grow copper production. It just seems that like they're focused on kind of the wrong metrics there. They should be wanting to be more efficient, what with profit margins and costs.
Absolutely. I think there's a proper size for a mining company and many other things. And there's a book. I never read the book. Sorry, I'm digressing a bit, but there was an optimization on how big a corporation or how big whatever. And it, actually, in many cases, when you grew too big, it was detrimental than it was to sit in that sweet spot. You know, it's sort of like being a wrestler. You got your own weight that you, for your weight class, that's optimum. If you go too big, you're not really strong. You might be a little bit stronger, but the guy that's really made for that class is going to beat you. I maybe a corny analogy, but I get what you're saying. I hope I'm reiterating it because it really is a mistake in my opinion.
Yeah, I agree. And most of the good gold mines, I mean, they're between like 100,000 and maybe 300,000 ounces per year of production. Anything larger than that, you're looking at super high cost capex, open pit mining, low grade, bulk tonnage. You have to spend billions of dollars building the mine. It's not going to come in on time and on budget. The grades are going to be bad. You're going to spend an insane amount of diesel and electricity moving uneconomic rock. That's like 1 gram per ton gold or less. So it just doesn't make a lot of economic sense unless the metals prices are what at these levels or rising at least. Can't do that for a super cheap gold price anymore. I think it's stupid to even try.
I agree. You know, if I was Newmont, I would definitely start. I would just consolidate. I would sell off all kinds of assets, the ones that were least profitable, and shoot for whatever the sweet spot is. But you know, it could be 1/5 of what it is now. I don't know.
Now,
I
I
don't
want to
know.
ask you about geopolitical risk in mining. Are there any countries like we've seen in the news stories with Barrick Gold and Mali, Cobre Panama and Panama? I don't know if they're going to restart it soon. There's rumors that they might actually restart it soon for First Quantum with the copper and gold mine. Are there any specific countries you think that people should stay away from now?
Well, the Fraser Institute, as you know, does a study every year, and they rank them. And usually, I agree with it pretty much. I mean, not exactly, but I think they do a pretty good job. I mean, the whole time, and I've told my subscribers basically from day one, and that is I've stayed out of South Africa the whole time, and the place to be in the 70s was in South Africa. I mean, if you got in on some of these big, they call KAFRs, but these gold mining companies in South Africa, your dividends were basically the price of the stock after a decade. So if the stock was $10 a share, roughly 8, 9 years later, you were getting $10 in dividends. It was incredible how well those things did. But the political situation was so tenuous, to put it politely. I just stayed away from them. Now, there are a lot of my friends that follow like Jim Sinclair into his mining project and others, but I basically stayed away from them. And the total truth is there was one situation in South Africa. I did trade it for a brief time, but I didn't apologize to my subscriber base. But I just said, here, I know I said I'd stay out of South Africa. Here's a unique case. Here's why I'm doing it, but it is not a long-term hold. It's a basically in and out situation.
Yeah, I mean, Latin America, like the policies can flip flop quickly. I remember a year ago when I was interviewing you with the Mexican elections and we didn't know, and she was talking about like banning open pit mining. She didn't ban it, was all talk. Um, Maybe they're going to increase the cost of the permitting process and delay it by a couple years or something like that, especially for high grade narrow vein underground mining. So those are going to get approved, it seems, but they might delay the permitting process out. But I think Argentina. So if I want to talk about, something that looks a country that looks like it's going to be pro mining for at least the next couple of years, Malay over the last 12 to 18 months, I think he's really put in a lot of favorable policies. I think Argentina is looking like a pro mining country now.
Yeah, I agree. I was down there not some time ago. It's been a while since I did any mining trips to Argentina, but when I was there, I was pretty pro mining, and it's come back. And there are some really, I mean, Mina Marta mine is there, and that's probably one of the richest silver mines in the world. And the project I was on was actually just north of that area. They had a pretty lucrative silver situation. It's been sold. One of the guys here in town actually started that mine. It was Hunt Mining at one time, but he sold it out probably at the right time. I mean, these things are really difficult. It's kind of like the Trump tariff policy. It changes with the wind direction. You don't know how long it's going to last. And that's the problem. You don't want to do a lot of sunk cost, a lot of capital expenditure to see the regime change, and all of a sudden the political climate changes and they're not as pro mining as they were when you started the project. So it makes it very difficult.
This is why I like the royalty model so much, except for what happened with Franco Nevada and what Cobre Panama, because they had so much. I think over 20% of their annual revenues were based on Cobre Panama, the gold stream there, and then they didn't structure it so they had enough legal protections in there. Because I think Randy Smallwood of Wheaton Precious Metals, didn't he say he was offered the same deal and he said he walked away because he didn't like the legal protections?
Yeah, no, that's a bit of an embarrassment for me. I mean, I've been huge on Franco from the get-go. In fact, we had Franco on the list, and as you may remember, Newmont bought it. Remember that? So then I put Newmont on the list to keep what Franco's royalties were doing for Newmont, and then Newmont spun it back out into Franco, and we jumped on it right away. I couldn't get in on it right immediately because it started, I think, at 19 a share, but I got in pretty close to that and
I
was
think you're
involved in
talking
that.
2007. I think they respun it out. They put additional royalties that Newmont owned into Franco and then they respun it out.
Yeah.
But overall, the business model is good. I mean, in hindsight, David, that was a buying opportunity. So all the bad news from Cobre Panama, where the stock was down 40% and the loss of our revenues was only 20%. So that was a huge mispricing there. The market had thrown the baby out with the bathwater at $110 a share. I thought risk reward Franco was a good buy. And I was talking with you about that on the podcast back then. So.
Yeah. We hung in there. I mean, most of my people, a lot of them just buy and hold. And I know what we outlined here is you really don't want to do that. If you're going to do it, you want to do it with a royalty company for the most part.
Especially if you can buy like really discounted assets and the bad news, there's a huge overreaction. I mean, Royal Gold, do you remember like the Mulligan gold stream? They had to restructure that and the shares dropped like 40% for a couple months. That was a buying opportunity. Sandstorm Gold was hated like no one. I mean, the trolls for Sandstorm Gold, the negative stuff was just like people were literally copying and pasting the nastiest stuff about the company and Nolan Watson and stuff like that for years. Literally, it was the same stuff, same like half a dozen trolls, nasty stuff. The shares will never go above $4 or $5. I mean, finally, like it looks like people are starting to recognize this a good business.
Yeah, definitely.
It's just amazing now though that with the gold price, the sentiment finally for some of these royalty companies is finally starting to change. I mean, you think people are finally starting to recognize what the free cash flow growth, the potential for dividends. Is that why people are starting to recognize this?
Well, I don't know how many are. I mean, I know my, subscriber base is down. It's been going down every year for like the last 4 years, which is a bit upsetting on a personal level, but I'm bigger than money. But it's just the fact that these are the opportunities, especially the last couple of years that we talked about. Value investment perspective. We're sitting at a place where we should be grabbing a hold of it. And most of my interviews, I say, if you want to catch the people that bought 2000, gold 2000, you can buy the miners, the right ones, the top tiers, the high cash flows. But it kind of seems to go in one ear and out the other. Now, my people that are still with me, which is, a lot of loyal subscribers. They're hanging in there and they've seen, a lot of these stocks, not as of today, but not that long ago, were making new highs, as gold's making new highs. And of course, the bullion only guys are saying, well, gold always outperforms the stocks. Not necessarily if you pick the right stocks. I mean, some of them acknowledge, my work and others that can outperform. But, if you're just going to do it by a basket of, 25 stocks, 25 gold stocks, you're probably going to do no better than the bullion's been doing, or maybe a little worse. So it
Well,
is a tough game, but it is a worthwhile one to me. I'm still passionate about it.
now, I would agree with you that that bullion's going to outperform the mining companies because if you look at the max charts of bullion prices, gold and silver bullion prices, or like a proxy for those versus like Barrick Gold or Newmont Mining or the GDX, bullion prices have drastically outperformed them. However, the top performing gold stocks, David, the last like since 2009 or 10, three out of the five of them are royalty companies. So like your Wheaton Precious Metals, your Franco Nevada, Royal Gold, you've gotten dividend increases. When the cycle turned into a bear market, these companies reinvested capital, their free cash flow into doing deals, taking a long-term view, right? So they were smart, they were contrarian with their investments, and that's how you outperform the bullion prices in the long term.
Exactly. Well said.
And so that's why the business model works, because the business model, what is able to be more diversified, it's able to invest into the bear market there. I mean, the deals that Wheaton Precious Metals, Franco Nevada, Royal Gold did in the bear market are the reason why those companies are just minting money right now.
Yep. That's it.
So it'll do you think we're going to see more consolidation in the near future with some of these producing gold miners, or do you think that they're going to be more cautious and about mergers and acquisitions?
Well, I think there's M&A coming up. I mean, there's some of these junior producers that are selling, close to book. I mean, there's some out there. In fact, I'm still, Lemuria Royalty, which I started 20 years ago, was merged with another company, and I haven't had much to do with it. I do sit on the board, but we found some in the private equity that are really juicy. I mean, you just can pass them up. I mean, it's kind of like saying, "Well, do you want to buy a $5 bill for 350?" And the answer is, "Yeah, I think so." And it's gold that you're buying for that. So it's like, so they're still out.
There's
I
smaller
think they'll
royalty
be.
companies like Empress and other stuff that go IPO, but then they tend to get bought pretty quick. Like within a year or two, some of the medium sized ones want to take them out. So there's like, because the royalty companies always have free cash flow, they're always looking to add growth, do deals. So I think we'll see more mergers and acquisitions in the royalty and streaming companies first in the next 12 to 24 months.
Hmm. Agreed.
Yep, it sounds like your other smaller company. I remember when you and Chris started that, so it got rolled up and merged because the people want to buy the royalties now. The market loves these things. We're going to see an IPO. I think we were talking before we started recording. We're going to see an IPO for another royalty company coming in. It's just a spin off what from B2 Gold and Equinox Gold and Sandstorm Gold, and that's going to be IPOing in the probably by the end of this year.
Yeah, great.
I want to ask you about building new mines. So, are we at the stage now where, say, a pension fund, an investment bank is actually going to give a junior mining company the funds to go and build a new gold mine, or do you think we're not there yet?
I don't think we're there yet. I really don't. I think there's just too much uncertainty. Where's it going to be built? Is it going to be tariff on it? What's the political climate? I mean, you hear one thing out of the political class in Mexico, but yet I've got one of the top tier guys at the highest level, near the highest level in Mexico mining, and I interview him for my private members, and we get the real story on the mining industry, and it's very different than what you hear in the newspapers. So I wouldn't. I mean, I wouldn't do it. I think there's just too much uncertainty. I doubt you're going to see any investment bank do it. Now, they might just see it on a small scale, like you're talking about some of these smaller royalties or whatever. You might put in a mom and pop kind of operation. I mean, I know of a couple right by me here in Coeur d'Alene. One's privately owned. They're making a small fortune. They're mining, I don't know how many ounces of gold. It's not a lot, but for the private ownership, you got four guys owning that mine, and you're producing that kind of gold. It's like, I mean, you got a big smile on your face. You follow my drift. So it's a case by case basis, but on the aggregate, on the bigger sizes, I don't think so. I really don't. I hate to say it because it's detrimental, especially to the junior miners, but that's the way I see it right now.
Yeah, I think people are really apprehensive. They want gold exposure. So I think the generalist investors, the institutional investors, the hedge funds, the pension fund money that had no gold exposure, I think they're going to look at getting physical metal first, maybe looking at royalty companies, the senior ones or the mid-tier royalty companies first before they do that. And I've been watching the capital allocations, David, from the senior gold miners and the mid-tier ones. Where are they investing their free cash flow? They seem more interested in what upgrading their mills. So doing expansion projects, upgrading their mills. We've seen what Agnico Eagle do some private placements for a few juniors where maybe they have a right of first refusal to buy the junior later. But as of right now, they're only funding what 20 or $30 million. It seems like they're being pretty cautious.
I agree. They are.
So you think that that's until something changes that that's going to be kind of the status quo for a while?
I do. I mean, this cycle gets uh, I don't know how to express it. The cycle never goes the way that it could to maximize profits and cash flow for everybody. In other words, you get down to the bottom of the barrel, you've got to put in a new mine, and then all of a sudden everybody kind of panics and they put a new mine in, and then when they get to the top of the cycle, they waste their money and spend it on juniors they shouldn't have bought and overpay for assets in the ground and that type of thing. It never seems to be in sync. There always seems to be a disconnect. The left hand's, going, one part's going up while the other's going down. I don't know how to express it without like drawing it on a chart, and that was pointed out to me very early on when I started how to evaluate a mining company. How do you invest in a gold mining stock? And there's been books written about it, as you well know, but it's not the easiest thing to do. And this out of sync thing is bad for everybody. It doesn't help the investing people. It doesn't help the banks. It doesn't help anyone. And that's why these banks, they don't want gold. They want cash. And they're going to make you hedge. And when you hedge, it's usually not really good for the investor because they want the upside of the gold price. So
Or,
it's
or
very interesting industry.
David, or the bankers getting a commission, like a huge bonus or something like that for helping a leverage buyout on a deal. So the incentives for these bankers doing deals or capital raising, it's the opposite of what the mining company should be doing most of the time. It's the bankers looking to get fast commissions and fast bonuses for, a bad leverage buyout deal or bad terms on debt at building a mine or something like that. And then the shareholders are not happy. I mean, like the Equinox Gold, the merger, I think the company that's being bought, I can't remember its name, that Equinox has a bid for in the merger, the shareholders of that company, because they have a good gold mine in Canada, they're not happy about the terms for that deal either.
No, you're right. It is, I've said it 3 times. It is a very tough business. And you really feel, you know, uh, there's some emotion involved, at least for me, because you pick the right one, it's done the right thing, and you should be rewarded for it. And in some cases, you're not. And that's just part of this business. It happens in other businesses as well. But I
It,
remember when Mag Silver was bid for, and Dr. McGaw said this is a bid under, not a bid a take out. It's a take under, not a takeover. And of course, it didn't go through because the shareholders were smart enough to refuse the offer. But it is not all that unusual.
if I remember correctly with that Mag Silver deal, I think Fresnillo delayed things for a long time about the payments and the terms of the contract for funding the mine. They were just like slow playing intentionally to try to get the shareholders to sell the assets out, the company, the mine interest out for pennies on the dollar. So I mean, the games that were being played, like the shareholders almost got screwed there. Just seems that like a lot of these buyouts and mergers and acquisitions, most of the time the shareholders for the junior miner don't benefit that much. You have exceptions, obviously, with like Great Bear over the last couple of years. That was like a big win for junior minings, but a lot of the times they just don't make out.
For the producers, as you outlined, the best way, and it's almost impossible to forecast, but the best way to see a junior do well is on a discovery. And you should get out on the discovery because they always get overvalued. Then they come back to reality. And that's the time to, when everybody wants to buy it, sell it. But yeah, you're right. I mean, on these mergers, acquisitions, that type of thing, sometimes favorable, sometimes not that favorable. Sometimes too, on a junior that is a producer, I don't want to contradict myself. I just give you the bigger picture. You'll get, maybe an okay deal to what I would consider a fair deal or two. You'll be rewarded. You're going to make money, and the money goes into, let's say, a stalwart like an Agnico Eagle. Well, I much rather have Agnico Eagle for the long term than I would, let's say, XYZ Mining in Idaho. So there are times that it's beneficial, but in a lot of cases, you got to be very careful.
And that's why they subscribe to a newsletter like yours for the junior mining stocks. Otherwise, for me, I just look at buying the royalty companies long term for my precious metal exposure, besides actually owning metal. And I try to buy the royalty companies, when I think like the business is cheap and hated and the valuation's pretty good.
Yeah, yeah, exactly.
Yeah, but the royalty companies, David, I think we're going to see huge mergers and acquisitions because some of these companies are just literally minting money. They're talking about like Wheaton Precious Metals and Royal Gold and some of these other guys. I mean, they've already announced dividend increases. So, I mean, what else are they going to do with their free cash flow? They're going to want to find additional growth.
Well, going back to what I said a moment ago, I mean, this is going in sync. I mean, they've got a lot of cash flow. The market hasn't recognized their value. They're sitting on cash now. If they make, if they draft well, I just watched the NFL draft. I mean, if they do well and buy really good assets at, fair or decent prices, or maybe could find some that aren't priced correctly, that's the part of the cycle where they should be doing this. So, this is one of those times where it syncs up, and who's doing it? The royalty companies. Why? Because they have the cash to do so. So definitely, I mean, I've been, as you well know, a big proponent of the royalties from day one and continue to hold those. And a lot of guys that were in the business are no longer in the business because they focus too much on, let's say, the junior sector.
Yeah, and a lot of the mining industry and newsletterers also hate the royalty companies, but the royalty companies, like the larger ones, are often funding the drill programs. They're buying some equity in the juniors. They're funding the drill programs, and then with a gold or silver byproduct stream, they're helping fund the mine because in a lot of cases, David, either the mining company that wants to build the mine, they can't raise enough equity, or they destroy the amount of share dilution and then reverse stock split, or they can't use debt because the banks won't help them fund. So the pension funds, the normal merchant banks, investment banks that would have helped the mine get built through debt or equity, they have to put a stream in place now because the royalty and streaming companies are the ones providing a good chunk of the capital to build the mine in the first place now.
Well said. And, the basic facts are, in a free market, which there's some vestiges of free markets left, those companies wouldn't exist if there wasn't a need for them. And so if I'm XYZ mining and I want to get this mine going and I can make a deal by utilizing a stream contract and the bank won't touch me or they're going to put me in debt so bad I'm not going to make any profit for my shareholders myself and I've got, my whole family into this company, I'm going to go with the stream. And so, as much as people, they're taking advantage or whatever, well, a deal's a deal. And most of those deals are far better than what the banks would do. So, there is a reason these companies exist.
Exactly. So if you're going to blame someone, if you don't like the royalty and streaming companies, if you're a mining executive or a junior miner promoter that's listening to this podcast and you don't like the royalty and streaming companies, and there's a lot of people in Vancouver that hate them, you better blame the pension funds that will not fund the mining companies because they want like GLD exposure, or they're going to buy a small chunk of a mining stock ETF and they're not going to fund any individual equity in any mining company. And you got to blame the banks because the banks, for whatever reason, either they hate commodities because it's ESG policy, or they have Basel III regulations and they can't do any investments into energy or mining. I think there was ESG laws, someone told me, what, in the last like 5 to 10 years that were put in place, that some of the Western banks in the US and Canada, they can't fund oil and natural gas projects and mines because of ESG policies. So you got to blame them. You can't blame the royalty and streaming companies. They're just filling the capital void that has been created through these dumb laws and through the pension funds and the banks not wanting to fund any commodities or mines anymore.
That's it.
Well, David, I really enjoyed our time today. I think people are going to do very, very well in the royalty and streaming space. I think we're looking at mergers and acquisitions. I think we're looking at additional investments into growth. And I think we're looking at additional dividend increases. We've already seen some announcements over the last 12 to 18 months of dividend increases from like Wheaton Precious Metals, Royal Gold, Cisco Gold Royalty. I think we could see more dividend increases to come.
Well, thank you for your time. And I always enjoy your interviews. They're very enlightening and a little deeper than several that I do. Thank you.